Welcome to Transform Now, the podcast brought to you by SS&C Blue Prism. Enterprise AI isn't just a tool, it's the heartbeat of smart organizations like yours, helping to reinvent work to deliver higher growth, more customers, and better experiences. Join us as we discover how AI-powered work orchestration and automation is making things better for everyone: customers, employees, shareholders, and most importantly, you. Let's get into the show.
Hello, everyone. Brad Hairston here. Welcome to Transform Now. My guest today is Vishal Sodha, Senior Risk Solutions Advisor at SS&C Algorithmics. Algorithmics is an advanced financial risk and regulatory capital platform under the SS&C parent company. And, Vishal, risk management comes up a lot on this podcast while we're talking about automation and AI, especially in the financial services industry. So I figured, why not bring one of the true experts in this space on the show? And I didn't even have to leave my company to do so. So Vishal, welcome. Why don't you tell us more about yourself?
Great. Thanks, Brad. And thank you very much for the opportunity to speak on this fantastic series of podcasts. So I joined SS&C Algorithmics around 3 years ago to lead the efforts for our credit risk solution within Algorithmics. Before that, I actually spent best part of 2 decades on the other side. So I spent 18 years in global markets roles at several investment banks, a decade trading and selling fixed income products at Citigroup, and then a number of years at Credit Suisse and Nomura as well. So, come from a risk-taking role to very much a risk management role now, which is quite exciting.
Well, it's great to have you on the podcast, Vishal. And for those not familiar with Algorithmics, tell us about the company. What do you guys bring to market?
Sure. So Algorithmics was established over 35 years ago. It's been a true pioneer in the risk management space. So it's been a leading industry provider for financial risk management solutions. We support financial institutions really to make those risk-aware business decisions, to comply with financial regulation, and ultimately, navigate tricky markets and maximize shareholder value. And it's a full suite of products, sophisticated, solutions pretty much across every risk category, from market risk, credit risk, balance sheet risk management, and across capital markets.
And what types of financial services companies make up your customer base? And also, who are the typical users of your products within those organizations?
Sure. So this isn't the Algorithmics, or affectionately known as Algo by our clients. It really has a worldwide customer base and a global footprint in terms of where our clients are based, but also where we have risk professionals located and supporting our clients. So the Algo platform supports sell-side clients. So this would be global and regional banks across every time zone, and buy-side clients. So that's insurance companies, asset managers, and hedge funds. The users of Algo are very broad. All the Algo solutions are fully configurable. So what we mean by that is that the data access, dashboards, and so on, they really can be tailored towards a user-specific role, their seniority, or any tasks that they may need to operate. So users spread across various functions, but in particular, risk officers, credit managers, middle office teams, but also front office personnel. So these could be relationship managers and bankers, for example, creating underwriting and credit origination decisions, and portfolio managers, traders, and analysts. I think where our clients find a lot of value is that senior management, chief risk officers, chief operating officers find tremendous value in being able to get that single view of risk across the entire enterprise, whether it's a large bank or a large asset manager, literally at the touch of a button. And we have a full suite of products and solutions to support each of those categories.
That's great. I would sum that up as saying everybody needs Algorithmic. There's risk management is strewn across virtually every area of the financial services industry. So I can't imagine a company that in some form or fashion doesn't need a platform like this.
Absolutely. Yeah.
So Vishal, from your perspective, from the Algorithmics team, what do you guys see as some of the top trends in financial risk management that will likely shape the industry for years to come?
Sure. Great question. So I think the key theme that Algorithmics has always been focused on is supporting clients to strengthen those risk management processes
Hmm.
throughout economic cycles, but especially important amid uncertainty and volatility, which is what we're seeing right now. So whether it's in the aftermath of the global financial crisis and the collapse of Lehman Brothers, or adapting to the new paradigm during and after the pandemic. And more recently, we've obviously seen banking failures in 2023 with the collapse of Silicon Valley Bank and Credit Suisse, which were, very much case studies in core risk management frameworks. Each of those crises have really shone a light on the need to move away from manual processes, unify disparate systems, and ultimately provide a comprehensive and timely handle on a financial institution's exposure to their clients, counterparties, and across every asset class.
Hmm.
So right now, there's obviously several major macro and geopolitical themes which are driving markets. And as such, this really emphasizes the importance of deploying best practice financial risk management. Market participants have heavily focused on the pace of the Fed rate cuts. Global central bank cycles, global central bank rate cutting cycles have often led to market volatility, which we've seen in the last few months. And financial institutions really need to manage this in terms of interest rate exposure, FX exposure, and so on. And very important right now on everyone's mind is potential trade and supply chain disruptions, potentially from tariffs for certain industries or geographies. So, for example, in certain manufacturing sectors, a product assembled in one country may rely on raw materials or components sourced from multiple regions. And if economic policies such as those are altering a cost structure, this could potentially create a real financial strain on certain businesses. And this could ultimately impact their ability to meet their financial obligations. And this could increase the risk of credit deterioration. I think there was an article recently where I think BMW announced that their profits will be impacted by €1 billion on the back of potential tariffs in EU, US, and China. So this uncertainty around international markets can really complicate risk assessment. So companies that face potential increase in operating costs or reduced access to materials can face those cash flow challenges and the ability to service debt. So as industries are navigating these uncertainties, financial institutions really need to remain vigilant in terms of evaluating the potential risks across their portfolios, whether it's to certain sectors, certain clients, or across a particular industry type. And the market volatility we've seen in the last couple of months, it really underscores the need for businesses and financial institutions to closely monitor their portfolios with a really strong risk framework to support those early warning signals, in particular for managing credit risk.
Interesting. Took a look at the platform and the various types of risk that Algorithmics helps companies mitigate, and it's really pretty broad. One of the products that kind of caught my attention that is featured on the website is the Hyper Risk Engine. That's HIPER, and it's described as a high performance risk simulation engine. Can you elaborate on this?
Oh, absolutely. Yeah. This is one of the most exciting products in the Algo suite. It's what we could describe as a next generation of simulation technology, which has been developed by Algorithmics. And its main functionality is to calculate XVA sensitivities. For example, the rate of change of metrics such as CVA, which is credit value adjustments. That describes the potential loss, due to a counterparty defaulting or debt value adjustments, DVA, and so on. So the sensitivity to the measures that banks and trading desks would have, and also counterparty credit risk or CCR. And, the team have developed a number of sophisticated optimization techniques to really give that incredible performance acceleration. And it's really achieved an order of magnitude in simulation performance. I think it's 333 times faster to come out with the same outputs. And this is with a near perfect, so 99.7% reduction in batch time and a reduction in hardware of I think around 25%. And
Wow.
in some of the simulation examples that we've run for clients, in one of the examples, it reduced their runtime from just under an hour to 10 seconds. And in another more complex simulation, it was traditionally taking 8 to 9 hours to run this simulation, and that was dropped to just 2 minutes. So
Huh.
it's safe to say Hyper is an absolute game changer for risk simulation for these key measures and metrics that banks need to really get a grip on, especially in periods of stress and volatility.
Hmm. Amazing. Vishal, with SS&C's acquisition of Blue Prism 3 years ago, many lines of business within SS&C have been exploring ways to extend their product offerings with the help of digital workers. What's an example of how this has played out in the Algorithmics product suite?
Sure. That's a great question, right? And this is a partnership collaboration that we're really excited about, and that's working incredibly well across the two business lines. And so I touched earlier upon the importance of early warning signals, for example, for risk management. And what I mean by that is the importance of financial institutions to really be on the front foot when it comes to awareness of potential credit deterioration or even a default or of a customer, or, for example, a significant credit breach. And what we found was that by the use of intelligent automation, these processes can be significantly enhanced to rapidly alert a risk officer or senior management of these material threats to the financial institution or the enterprise. And ultimately, it enables those users to prioritize their tasks and more rapidly mitigate risk. So, we've recently deployed the Blue Prism framework with digital workers, or intelligent automation agents, as we sometimes call them, with one of our large customers. And this is something which we've been speaking to about with a number of the clients who are using the Algo Credit Manager solution, which is our marquee solution for managing the entire credit lifecycle. So one of the use cases is around covenant monitoring. So covenants are a critical compliance process for any bank, who is in the lending business, which would pretty much covers our entire customer base. So traditionally they would provide that early warning signal, that guidance on the financial health of a company. So a typical loan contract would have, say, half a dozen financial covenants, generally measurements around leverage, for example, like a debt to EBITDA ratio, as well as a number of non-financial or operational covenants. But you can imagine, if one loan has half a dozen of these financial covenants, and these need to be monitored and checked on a periodic basis, let's say semi-annually or even quarterly, a risk officer to have to go through that manual process is quite time consuming. And we estimate it probably takes 5 to 10 minutes just to check one covenant. So you've got to, get the annual report, you've got to read the financial statement, calculate the ratio, and then check against what you've got in the facility agreement of the customer. And if each loan contains half a dozen of these, that's quite a time consuming process. So what we've developed with the use of Blue Prism digital workers is effectively a digital credit analyst who can perform these laborious but very important tasks at absolute speed. And what we found was that the digital worker can check in our Algo Credit Manager system, can look at and see what the covenant reminders are. They can then check those against the financial statements. They would then mark them up as compliant or non-compliant. They would then even send an alert or via email to a credit officer to alert them on any non-compliance. And therefore, it really prioritizes the human user on which of the ones which actually are potentially in breach, rather than having to sift through hundreds and hundreds of these. And we found that this process actually runs 500 times faster than what a human is capable of doing. So it really allows the business to respond immediately to potential default or credit deterioration. And so, so this use case has attracted a lot of attention and certainly can add tremendous value to clients managing a loan portfolio. And the second use case we've developed, again, using Blue Prism digital workers, is around managing credit breaches, or what we call excess management. So again, this is a core functionality within the Algo Credit Manager tool. But what we found through a number of conversations with our clients is that, a large financial institution, and including the large bank in the Middle East who's taking this on board, they traditionally incur a large number of what we call technical breaches. These are not material breaches, these are not material credit breaches, but in fact, due to a currency fluctuation, it may, something may have flagged as a breach. It may be due to a mistrade or a mismatch in settlement values, or just a data issue as well. But on any given day, a risk officer would walk in and have thousands of potential breaches which are flashed up on their dash. And again, you can imagine the amount of time it takes for a risk officer to divert their value add time to sit there sifting through, a whole number of line items for their trading book and treasury book, but also their lending book as well. So again, what we've done through the rules-based framework that we have in ACM, which is perfectly, set up for a rules-based framework such as intelligent automation, we've created a digital credit analyst who again can review the trades which have come through, label them in terms of which ones of these have been caused by what factors. Is this a currency fluctuation? Is this a misbooked trade, etc.? And then even create a dashboard so that when the human risk officer comes in the next day, they've got a nice dashboard to say, okay, there's 500 trades which are flashed up as a breach. Actually, these are the 30 that you need to review. And so a human user really knows which to prioritize. And ultimately, it's about prioritization of their tasks and then mitigating that risk and threat to the bank much more rapidly.
Vishal, it's really neat to see how you and your team, your knowledge of what the end users are going through in various risk management roles and the different tasks that are still very manual and tedious, how you can now extend the value of algorithmics with a complementary technology, Blue Prism digital workers to address those things. So this to me is really a great collaboration and delivers even more value to our end customer. That's really fantastic. Vishal, can you talk about how AI is enhancing traditional risk management approaches?
Sure. And I think this is, from our perspective, and I think as part of this collaboration with Blue Prism, it's really about extending some of the thoughts and ideas around intelligent automation, but then taking them to that next level with AI and Gen AI. So, as mentioned, early warning signal theme is really front and center in intelligent automation, but certainly enhancing that with AI really takes that to the next level. So, for example, an AI agent could perform sentiment analysis on a company or industry. They have the ability to check multiple sources of information, news, social media. And in doing so, they can rapidly generate a report or provide advice or guidance on where, potential stumbling blocks or potential issues may be, whether it's for a specific customer, whether it's for a specific industry or geography. So it really, complements what we've already developed, but takes it to that next level where, it really allows that human user to mitigate that risk and prevent loss, but also maximize revenue opportunities as well, because it can also be used to signal where there's opportunity as well as a chance of loss. Right. So that's one key use case. And then there's another couple of use cases which we're currently exploring. Credit processes, for example, are very document heavy and typically involve a lot of unstructured documents. And again, that's a perfect use case for the use of a combination of the Blue Prism intelligent automation as well as Gen AI. And so this could be reading and extracting information from financial statements, so that data can be more easily managed and digested for loan monitoring or covenant monitoring and so on. And and similar to that, as part of a traditional credit process that Algo Credit Manager handles, credit memo generation. For example, what I mean by that is, when a corporate loan is being applied for, a relationship manager would typically, gather lots of information from industry reports, they would gather ratings reports, information from the customer, and so on. And it's, as you can imagine, it's still quite a time-consuming process to bring all that information and then create a credit memo document and then put through the system for a credit review and approval. So in this scenario, an AI agent could be trained to gather all that information that's required for a credit review or a loan application and decisioning process. And again, similar to the other examples, extract the information from various sources, from the customer, financial statements, industry reports, social media, and really bring it all together and summarize it into a nice, neat credit memo so that the banker can review this, send it off to the credit team and then fast track it for credit decisioning. And ultimately, that's an example of something which is less of a risk mitigation, but it actually allows more loans and more business to be done and helps grow revenue for our clients, as opposed to reduce potential for loss. Intelligent automation, and then enhanced with some of these AI tools that Blue Prism has developed, really has that ability to maximize value on both sides, loss reduction and revenue maximization as well.
Yeah, those are terrific examples. Let's talk about cloud computing. So with the industry, its shift towards cloud computing, how is Algorithmics adapting its AI and automation capabilities to support, cloud-based risk management solutions? Could you speak to that?
Yep, sure. So, cloud is very much, front and center in how a number of the solutions are deployed by our customers. We're agnostic in terms of the platforms, whether it's managed service through SS&C Cloud or, one of the big three providers, AWS, Azure, and Google. Algo Credit Manager, which I'm responsible for day to day, is a cloud native platform. And we have, several of our very large global banks already, managing the solution on a cloud framework. But when it comes to AI and IA, I think the business is continuing to invest heavily, in operational control, resilience, both for on-prem and cloud-based services. And as part of the adaptation of intelligent automation, we've also introduced several digital workers to really streamline some of those operational efficiency. So, for example, for our managed service clients, we've rolled out a digital worker who can monitor data feeds, manage incomplete information, raise tickets where there's any issues, and also self-diagnose with any processing as well. And through the use of the Blue Prism RPA technology into some of these support functions, it really allows the automation of some of these process-heavy tasks, such as file monitoring, user management functions, and it allows the standardization and increased accuracy and reliability. We've also released our first agent to perform data analysis. So this is a virtual agent who can provide daily reports, highlighting changes in a portfolio from a previous day. And so a human user can come up their desk in the morning and they immediately know which instruments or portfolios, need to be investigated further. So this really saves time in searching for changes, understanding, where any errors might have come from. And again, this is all very much complemented with our, sort of front foot approach to cloud deployment as well. The other example we wanted to highlight, I think it was exciting to highlight. We've also released, or soon to release actually, our very first generative AI digital assistant within a few months' time. So this is known as ARIA, which stands for Algorithmics Risk Intelligent Assistant. And this is an AI, tool, an AI assistant, which will interface with our risk analytics tools. So ARIA will leverage a large language model, and it will enable users to request reports using, plain language text prompts, of our aggregation solution, which is called Stadium, and the reporting interface as well. So users can adjust characteristics, visualization types, request analysis, perform drill-throughs, and this is built on top of our core algorithmic framework. So it allows users to instantly access data, customize for it for additional investigation. And this is something which will allow, the users of these, of this algo solution to really have, a digital risk assistant to provide them those insights, that inputs, very much, with a few keystrokes. So this is something we're really excited, to launch, within the coming months ahead.
Yeah, this seems like a space where agentic AI could provide a ton of value just in terms of what these personas are doing day in, day out. So
Yeah, yeah.
that's great. That's exciting to hear that you guys have something coming out in that space.
Brilliant.
Vishal, how do you see the role of risk professionals changing as automation and AI take on more and more analytical responsibilities?
Sure. So I think, having been working with our clients and the Blue Prism team over the last year on some of these use case ideas, I think it's quite clear that the deployment of intelligent automation and AI from a risk management perspective is really complementary in supporting those risk professionals to prioritize those most important tasks, focus on investigation of potential risks and losses, and ultimately, mitigate risks faster. So I think whilst in some businesses, the use of intelligent automation is a FTE reduction type of activity, whilst we do see some cost savings from deployment of intelligent automation, we view it as it's more of a risk reduction, loss prevention, and revenue maximization exercise, because it's removing the need for the human user to spend a disproportionate amount of time on those, repetitive, laborious tasks when they
Right.
really should be looking for those revenue opportunities for figuring out which risk is going to impact the bank. So likewise, we envisage the use of intelligent automation and AI to really cut through the noise, to distill tons of data, tons of information. For example, the example I gave of summarizing a credit memo, which supports relationship managers to grow the volume of business that a bank can do and grow their market share and revenue. Ultimately, it drives value by reducing the professional's time spent on those repetitive tasks, such as the 1,000 line items of technical credit breaches. But what's important to emphasize is that the human user would certainly need to stay in the loop. This is very much supported by an intelligent automation agent or an AI agent to fast track certain processes and provide those insights and summaries, which a human user can then leverage for key decision making. And I think that's really where that complementary, that sort of hand in glove process of the human knowledge worker and the intelligent automation agent, it's an incredibly powerful combination, and one we're really excited to continue investing in and collaborating with the Blue Prism team on.
Wow. Vishal, I've learned a lot in this conversation, so I really appreciate you coming on the podcast and educating me on algorithmics. It's a really compelling platform that you bring to market, and it's really exciting to see how you're helping these risk managers go the extra mile and take out all the other manual tasks that are still on their plate. And as you said, giving them more time to do the important work. So thank you for being here, and I wish you the very best.
Thank you very much, Brett. Pleasure to be here, and I really appreciate the time and opportunity.
Thank you for listening to Transform Now, the podcast from SS&C Blue Prism. You can find all of our episodes on your favorite podcast channel, as well as YouTube. To stay on top of the hottest topics in the world of enterprise AI, subscribe now. The future of work is here.